Welcome to Insights into Insurance with Tom Sorensen of Americana Insurance Group. All information provided is educational in nature and not intended to be acted upon without first consulting the appropriately licensed professional.
Welcome on into Insights into Insurance with Tom Sorensen from Americana Insurance Group. And Tom, good morning to you.
Well, good morning, Paul. How are you doing?
Hey, fantastic. Thank you for asking. And I know, Tom, last week we had a lot of fun with the show, and we're hoping for listener questions. Did we get one today?
We did. And today, that's going to be our topic today is I got an email. It says, "Hello, Tom. I am looking into buying some life insurance, and I'm confused on the different types of life insurance there are. Can you explain the differences? Thank you, Janelle." And so, Janelle, I'm excited to introduce to you a guest I brought along today, and her name is Jolene Honkamp of Greenhaven Marketing, and she heads up our Financial Services and Benefits Division of Americana Insurance Group. Jolene and I have worked together now about 18 years, right, Jolene?
That's right, Tom.
With her expertise, she would be the perfect one to help answer Janelle's question.
Excellent. So, Jolene, kind of a big question. Before we get into that, just want to introduce yourself and what you do exactly?
Sure, Paul. I'm Jolene Honkamp. Tom and I have worked together for about 18 years. I've been in the life insurance industry for about 22 years. So I've worked both as an insurance agent and on the company side. And then I also have some designations, which would be the CLU, Chartered Life Insurance Underwriter, and a CHFC that I recently had gotten, and that is a Chartered Financial Consultant. So it's just a little more education so that I can give you more information.
Excellent. Life insurance, such a broad topic. Let's look at some reality of life insurance. What are some things people should know right off the bat, Jolene?
Well, I'd like to start with some statistics, and each year, LIMRA, which is a Life Insurance Marketing Association, they do what's called Life Insurance Awareness Month every September. And they always look at some statistics for life insurance. And the 2016 data showed that 30% of U.S. households, which is about 37.5 million people, have absolutely no life insurance. And life insurance is a crucial part of a personal financial plan. And I would go as far to say as it's vital for most. Also, approximately 50 million U.S. households say they need more life insurance. And that's about 40% of the U.S. population that is underinsured. And I think this is due to the confusion, like Janelle's question, about the different types of insurance. And I think another reason is people do not like to talk about their mortality. It is a tough subject, but if anyone relies on you financially, you need insurance. And another thing that I would like to bring up, holidays are coming. Life insurance is a great gift. I like to say it's a gift that keeps giving. Some of the top reasons for life insurance, the number one reason is final expense. And this coverage normally would be what's considered permanent insurance, which I'm going to talk about later. But it's to cover smaller amounts, usually under $100,000. And it's to cover funeral expenses, which now run about $15,000, and that's for an average funeral. And I'm not sure of how many of us can afford to pay for a funeral for a loved one and also go through the grieving process while handling the estate. So life insurance mitigates that burden. Another big reason for purchasing life insurance is to cover debt. So this is great for term insurance, which is another type of insurance, but it's covering debt like a mortgage or equipment. A lot of times it's for farm equipment. So banks even require this at times to secure a loan. So that's another good reason, and it covers that risk. The bank wants to make sure that if you pass away, you have that money to cover that debt. And it alleviates the stress to your survivors to have to come up with that or think of a way to take care of that. Another big reason is to pay estate taxes. And this is especially true for people who have a lot of assets. They've acquired a lot of assets, farmers and business owners. Assets can add up quick when you look at land, house, buildings and machinery. Before you know it, you are up to the estate tax exclusion amount, and you're taxed at a very high rate.
Yeah, and Paul, that's why you see a lot of auctions, farm auctions, okay? It's not that the people wanted to have an auction, it's because of the estate taxes they're forced to have an auction. So
Right, those taxes have to be paid in cash. They give you a time frame. And if you can't pay them, at times you can get an extension, but if you have life insurance, it makes things a lot easier. Life insurance is also a successful tool in transitioning a business or a farm. So from that point, I'd like to answer Janelle's question and talk about the different types of life insurance coverage.
just one thing that Janelle said, Paul, was she says some people don't want to talk about mortality. Well, and when it comes to life insurance, and I can guarantee you there's 100% guarantee that they will die. Okay, and I know that sounds harsh, but in a way, it's the truth, and so it shouldn't be a topic that should be hard to talk about, but it is for some people, and so we try to make it easier for people to talk about, and the thing is because of they will die, to try to help things move more smooth in the transition of the next heirs to have a better outcome.
And I can speak to that a little bit. When my fiance lost her mother in August, she had life insurance, but she got a new policy every year. We're not sure why, where she got the insurance from in the first place, if it was at one point union-based, so every year the policy number changed because there was different number of enrollees in the plan, and et cetera, et cetera. It took up to last week to figure out, the correct policy number and how much she would actually get out of it. So it is very confusing, and when it happened, we had no idea she even had life insurance. This is something that you have no idea about, especially if you've got children, or you should inform your spouse too, right? That, hey, I do have this is the plan, this is the policy, because if the unexpected does happen, at least you're prepared from that standpoint, right?
That's right.
Absolutely.
Let's talk a little bit about those different types of coverage then, Jolene.
Okay, the first type I'd like to cover is term insurance. Term insurance is the simplest type of life insurance, and it's also the least expensive. So I see this a lot when people are younger. When you're younger, you need more insurance. Maybe you're starting a family, so you have children. They're relying more on your income. So you need a larger amount of insurance. So most people start with term insurance. Otherwise, for the loans, like I mentioned before, it's covering a specific term period. Normally from 10 years, you can get 10, 15, 20, and 30-year term, depending on your age. But it covers that period with level premiums. Once that period is done, that insurance is done. Some of them do come with a renewability feature, but it's very cost prohibitive. It's called annual renewable term rates, and they increase every year. They're very expensive. The other rider that some term coverage has is a conversion feature. So that gives you the ability to convert a portion or all of your term policy to a permanent policy. And you don't have to use the whole amount. You can keep part as term. You can keep part as permanent. For example, I did that. I had a term policy. I did get some health issues, as we all do when we get older, so it makes it harder if you need to renew that term and you're going to buy another term period. You may have some health issues, so those premiums are higher. So it's nice to get it while you're young. If you do convert it, you do not have to go through underwriting again. So you take that same rate class that you got the first time, and you convert that to permanent.
I actually am doing that right now myself. I had a term policy that I'm making it into a permanent, and for the exact reasons why Jolene has talked about there. So it's but the thing is, not all term policies come with this. So that's one of those things where you need to talk to your insurance agent or whoever's trying to sell this to you or has sold it to you. Do I have a conversion rider?
And I think this is a good time. We'll take a quick break, and when we come back, we'll discuss some more different types of life insurance. You're listening to Insights into Insurance with Tom Sorensen of Americana Insurance. We'll be back in 30 seconds.
'Twas the night before Christmas when a mouse chewed on a wire, frying himself and starting a fire. The fire spread to the tree, which burst into flame, burning the presents, both the good and the lame.
A sweater? Yuck!
But the fire trucks rescued the kid's dad and mama, and thank goodness they had insurance with Americana. Bet you never saw that coming.
Wishing you a Merry and safe Christmas. Your friends at Americana Insurance in Albert Lea.
Welcome on back into Insights into Insurance with Tom Sorensen of Americana Insurance Group. And special guest Jolene Honkamp is joining us today. And Jolene, talking about different types of life insurance. We talked term insurance. What's next?
I'd like to talk about whole life insurance. And this is a very traditional type of coverage. And it is the first permanent life insurance policy that was created. It's more expensive than the others are today, but it is traditional coverage. You do have life insurance, usually to age 100, and in some cases now it is going out as late as 120. The intention of this policy is you're paying premiums, there is an interest component within the policy, and by the time you reach age 100 or age 120, the policy endows. And that means you have enough cash in that policy that equals that death benefit. So basically, it's like building up a bank within that policy to get the death benefit, but it is guaranteed.
Okay.
As long as you pay the premiums. From whole life came universal life insurance. And this is another type of permanent coverage, but it gives you more flexibility. So there's different types of universal life. You have your regular, which I think is the simplest in today's world. It's what's called a no-lapse guarantee universal life policy. I like to think of this as permanent term. We are in a very low interest rate market, which we've been in for a while. So right now it is not intended to build up cash value. It's a fixed product. When you think of universal life, there is a set interest rate set by the company, and there's a guaranteed rate. Right now, for the most part, companies are paying 2%. In the old days, you had 4%, you had 5%. So when you pay the premiums, there is an interest factor built in, and the insurance company can set that and change that interest monthly, but they cannot go below their guarantee. So right now, I would say any new policies are close to the 2% guarantee, and they're not going to go lower, but they are paying at their guarantee. So right now, I think of it as just you are guaranteeing yourself a death benefit, and you can pick your age. So you can, some of them you can come down to age 80, you're picking that age, and that's where I would work with your insurance professional to kind of work on where that is. You can go all the way to age 120, and I like to see them going more towards age 105 to guarantee that death benefit. So you pay that premium, you get that guaranteed death benefit.
Okay.
The other type that you have is an indexed policy, and that's where you can choose a fixed interest investment component, but you also have different indexed choices. So that would be your S&P 500, your Dow Jones. You have other options in there. So I like to call that your universal life. You can get a guarantee on there. Again, you can pick different ages. Normally they come with a 10 or a 20-year guarantee, but then you add a rider to get additional years, and you have the opportunity to build cash value. And again, this would be another one where you talk to your insurance professional to see which one is best for you, depending on what you're trying to accomplish. There also are some interesting riders that you can add on to universal life policies. One of the ones that I'm most interested in is the long-term care insurance rider that you can add to universal life policies. So this is a way to get long-term care protection using a life insurance policy. I know a lot of people with individual long-term care, they're afraid if they don't use it, they're losing the premium dollars. With the life insurance, you're going to collect on it one way. It's a permanent policy. You're going to collect life insurance. You can use it to pay for long-term care. So it works in both worlds, but there is an additional expense for that. Lastly, I would like to just briefly touch on variable universal life insurance. And this is permanent insurance. It doesn't come with all the guarantees. Some companies do offer some guarantees, but they are not lifetime guarantees. But you put your premium dollars in, and you can pick sub-accounts, which are mutual funds. So it is more sophisticated than the universal life or the whole life, and you have an investment component. So it would be subject to investment risk and interest rate risk. So I think if you're looking at that product, that's where you really need to be talking to an insurance professional or even a financial planner at that point.
Excellent. We got about 30 seconds or so left there. Tom, we're still looking for listener questions, right?
Absolutely. By the way, Paul, did I tell you that she knew her stuff?
Great job, by the way, Jolie.
Anyway, yes. So every week I'm going to ask for listener questions, and you can email me at toms@americanainsurance.com. That's toms@americanainsurance.com, and maybe we can get a question like we did from Janelle and talk about that next week.
Excellent. I want to thank you both for coming in today. This has been Insights into Insurance, brought to you by Americana Insurance Group.
You've been listening to Insights into Insurance from Americana Insurance Group. All information provided is intended to be educational in nature. Before acting upon any information obtained during the Insights into Insurance radio show broadcast, consult an appropriately licensed professional.